Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, this week we have many themes that can move the markets. With the huge packed week of data, the hotly anticipated US Federal Reserve is the main. Along with that, we have US-China trade talks, and also on Friday we have the US non-farm payrolls. Along also with this, we have China's manufacturing data, Australian retail sales, Australian CPI, and also we have, along with this, is that we will be viewing the Bank of England's rate decision this week, and also the Cajun manufacturing PMI, and also the US ISM manufacturing PMI. So we have a great many number of information and data, so be aware when trading the risk that's ahead of us this week, and keep stop losses accordingly to your risk management, and also take profit as well. To begin with, the Australian dollar bulls have cheered after reaching from a 6-day decline its target of 69 cents. I now view from a technical point, due to the fact that the ADX is trending and also along with that the MACD is declining, that we could see a decline towards 68.90 or 68.45 into the start of this week. Any advances should find a cap around 69.45, but firm above there at 69.90. Also, the note, as you can see from the cut of the 60-day moving average, we have quite a large candle. So no doubt some of the bigger players out there have actually started offloading some Aussie positions, maybe from the long side, and holding long US assets instead. Looking at the euro, the market presses lower, but not quite takes out the level of 110.90 after the knee-jerk reaction that we saw on Thursday with the ECB. Nevertheless, the hotly anticipated US Federal Reserve decision, along with that with the non-farm payrolls this week, will dominate the move. It is highly anticipated that the Fed will cut rates by 25 basis points, but we could see a hawkish statement which could send the dollars into the US higher, and not what probably Trump wants to see, as he did say at the weekend that he was looking possibly, or may not be, to intervene and sell the US dollars to stop the US dollar climbing. Nevertheless, the market is still poised for a further test down from the ADX and also the MACD. So I do like to see one more challenge at least to 110.90 and reassess from there, with the resistance currently holding around 111.70.80. The dollar yen, well, not as bullish as it gets closer towards 109. I believe the market will test lower, especially after Friday we got the US gross domestic product, the broadest measure of goods and services produced in the economy in the US, which rose by 2.1% annual rate in the second quarter, but down from 3.1 growth rate. Nevertheless, it's still quite a good number and still questions whether the Fed will cut rates this week. For me, it's a no. I still believe that we've had good non-farm payroll numbers, we've had good retail sale numbers, and also the fact is that the CPI, or the inflation, isn't too bad. A touch muted, but still, nevertheless, I still believe the Fed should hold off. It's what about Trump wants and getting re-elected that really wants to see the Fed cut. In the range that I'm looking for is a cap around 109 and looking back towards 108.20 and see if we can break there, which would reassess the downside of 107.15.25, which wasn't too far away challenge last week. The pound has got lower, and it would seem that the backfire, should I say, come to Boris Johnson's plan to get rid of the Irish backstop. Nevertheless, his approach at the moment is very strong in his first day in the House of Lords, but Chief EU negotiator Michael Browner, along with President Jean-Claude Juncker, has stressed that the new Prime Minister attempt to the withdrawal agreement cannot be opened. I've said all along that we could see a break to the downside, and if we do get a break of 123.50 to 70, then we would look down towards 121 figure 50 and reassess from there. Resistance seen at 125.05. Gold is still coasting sideways and still showing a bit of concern when it comes to the technicals. But if the Fed does look to ease rates, that is, this week, then we could see a bit of a rally in gold back towards the recent highs around 1,433 to 35. But I'm still a little bit cautious of that call because the technicals aren't overly bullish. And we could easily get a drop back towards the buy zone, demand zone at 1,395 to 1,410. Finishing up with oil. Well, that's trading sideways as well. We've got three candles engulfed here. Another three candles engulfed as well. Bullish, but from a technical point, not supporting that view. We could still see a pullback to $54 a barrel, but overall looking up towards $58 to $62 a barrel. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the Insta report, and I hope you enjoy the great start to this new week.